quickly shift focus and talk about what's going on with the tyre space. Top market names have been betting on tyre companies, and given the kind of recent correction, fund houses as well have loaded up on companies like a Tyres, and even a CEAT for that matter. And that stock is on our radar today. So let's quickly take it across to Karanya, find out what's really the lowdown, what's working for the company right now. Karanya?
Well, Aisha, tyre stocks, like you said, have been in focus, and what's really working for the complete sector is the fact that the natural rubber prices have been coming down. In fact, this year they hit a multi-month low, and that's why we saw a lot of these tyre stocks buzzing in trade as well. If you look at the chart, from April 27 onwards, the natural rubber prices have been on a decline. Now, natural rubber prices actually comprise of 35% of the entire cost of raw materials. So that declining gradually over the last couple of months has really aided the sector and aided the margin performance as well. Moving on to another important raw material which is used in manufacturing tyres, which is of course a derivative of crude oil. Crude oil prices, like we all know, have been spiking up from the same time around since natural rubber prices have been coming down. So slowly we've seen that uptick in the prices of crude, and that is what has been still a big concern for the industry at large. But clearly there's been some amount of relief on the natural rubber front, and that's why we saw the stocks also react positively to that. Now, what's really aiding the sector? There's been a broad-based volume growth, whether it's the CV space, two-wheelers, off-road vehicles, all of these passenger vehicles, all of them have been seeing very good demand over the last 1 year or so, which is aiding the volumes for tyres as well. Now, like I said, good prices for rubber, the decrease, the relief coming by has also aided the margins performance as well. Let's also look at the valuations. Balkrishna Industries is at the highest point. 22x is where its PE is at the current time. Rather, it's the PE for FY19. MRF 19x, Apollo 14, CEAT is also at 14x, and JK Tyres is 10x. And a lot of analysts and market experts are increasingly betting on stocks like CEAT. There's also TVS, Sri Chakra, and so on, because they believe that there's a lot of incremental value that is still there in this particular stock, in the particular company. And given CEAT, well, they are looking at capacity expansion in a very big way. Now, a maximum chunk of the revenue comes from replacement market, followed by OEMs, and then 12% odd exports. But they see the share, the revenue mix also change once the capacity increases. They're looking at exports in a big way. If you look at the segmental breakup in terms of products as well, they are betting very big on the TBR segment, which is already contributing in the highest amount, 32%, followed by two and three wheelers. These two remain the company's mainstay. The management held an analyst meet also very recently, and they pointed out the fact that they're looking at expanding in the PCR, which is passenger car radials, and TBR segment as well. So these two segments will continue to drive growth for the company. Now, a couple of concerns. Like I said, crude oil has been a big concern for the company. Capex, the company has entered this phase of very high capex commitments. The net debt could go up. The free cash flow could also come under some pressure. These are a couple of big concerns which are weighing on the margins, but we'll have to really ask the management as to how they manage to curb the pressure on the margins, the pressure on the financial performance, because at the same time we're also seeing very good triggers which are working in favor of the company. Like I said, overall demand has been very buoyant. The PVs and two-wheelers segment have played out very well, and even the exports is something that the management is looking at in a very big way.